Okay, we are live. All right, yesterday, remember this. I said that the S&P 500 is right up against the resistance, remember? Just like the moment in Stranger Things 1, where they are pushing the monsters, that is. They're pushing out of the wall in Will's house, and they can't quite break through the wall yet, but the wall is like bending like it's a rubber band, like it's elastic or something like that. And then we get hit with Elon Musk making a negative comment. A scary headline was written about it, and the market falls. And we get a weekly candle that is red on the screen, S&P 500. And remember, you can do this at home with us. There's a link in the description for a free account to TradingView. Click on it, sign up, doesn't cost a penny, and you can look at these charts as well. On the daily chart, which is this, I'm going to go to the weekly chart, and you can see we had that terrible 7-week in a row fall. We got a nice 6.5% bounce last week. I'm sorry, the week before. But this past week right here, we were down the first partial week of June, and we're down again. Is this going to be the start of another week after week after week after week decline until we reach our lower low target around 3,500 on the S&P 500? Is that where we're going? Did the rally that we had last week, the last full week of May, was that it? Was that the rally? The bear market rally? Well, we don't know for sure, and we don't know until it actually happens. So let's dig through today what happened, why it happened, and of course, the first half is to go through the market today, why it happened, what happened, and what to expect next week, and then answer your questions. So welcome back, investors, to Ticker Time News. I'm Adam. And the stock market, well, it retreated on Friday, sending the major averages back into negative territory for the week. The Nasdaq dropped 2.5% and underperformed throughout the entire session, surrendering, that is, 1% for the week. I should have had it pulled up here while I was talking about it. The Nasdaq, again, you can see another red week has now formed. We got the rebound, it ran out of steam, and now we're going to fall again for another leg down in this market. That's really what it seems like it's setting up over the longer term, bigger picture view of the market. Now, the S&P 500, I'll go back to that chart. Now, it fell 1.6% on the day and 1.2% for the week. The Dow Jones, let's pull that one up. The Dow Jones slipped 1.1% for the day, but only 0.9% for the week. You know, the Dow Jones typically moves in much slower percentages because it's a much bigger indice. It's got the big dogs in it, right? And then the small caps for the week. The Russell 2000, it actually, the small caps helped out. It helped out a bit, and they were a bit better. The Russell 2000 was down 0.8% on the day, and it's green. It has a green candle for the week. It has a green candle for the week. That's right. It was able to walk away with 0.3% this week. So small caps are looking a little bit different than the rest of the market right now. And I do find that very interesting. The stock market had to contend with a weak sentiment from an open, from the very beginning, from the very open of the market, as it was reported that Tesla, TSLA is the ticker symbol for Tesla, that Tesla CEO Elon Musk sent an email to other executives at the company expressing concern about the economy. Elon Musk said that he had a, quote, super bad feeling when talking about the economy and things to come. And of course, for their company. for Tesla. So if Elon Musk is warning about this super bad feeling, then that doesn't look good for Tesla. And Tesla was down nearly 10% today. You add in the after hours movement and it gets it even closer to 10%, 9.5%. That's a big drop for Tesla, but we're used to seeing big moves, big swings up and down for Tesla, so it's all right. Okay, so we got that. And then also with Tesla, in this note that Elon Musk sent out to executives, he wants Tesla's workforce to be reduced by about 10%. Now, we mentioned yesterday that Coinbase, ticker symbol is coin, C-O-I-N, that Coinbase had stopped hiring, and Coinbase also rescinded some of their accepted offers already. So they were firing people who were not yet hired, but hired, right? And this isn't going to stop. This is going to continue. And this is an element that you see in a recessionary time. And this is hitting many companies at once right now. And in addition to a warning from, oh my goodness, from a prominent CEO like Elon Musk. And of course, the warning about the economic hurricane that is approaching from Jamie Dimon, from the CEO of JP Chase. The market received a better than expected jobs report for May. For the most part, there were some other little cracks in there, and we talked about it with our investors on Patreon this morning about those little cracks from the jobs report. It wasn't all sunshine and rainbows. Now for May, which didn't offer much of an argument for a slowdown in the Fed's rate hike plans. That said, employment in the retail trade declined by 61,000 in May. And the number of persons employed part-time for economic reasons increased by 295,000 to 4.3 million. Why would that happen? Why would the number of part-time workers increase right now? What would you think? What would be the reason for part-time work increasing now? Well, it reflects an increase in employees whose hours were cut. They were full-time employees, but their hours were cut, making them now part-time employees. That's not a good sign for the economy. Now, their hours could be cut, lack of business, or business conditions. Business getting set up, trying to rush to get their balance sheet in line so it can act as a shield. And you know, in a crazy market like this, sometimes a smart move can be dividend stocks. They can even pay you on a monthly basis, so it's not bad to have. Some pay quarterly. Very few pay on a yearly basis. And even the majority of them do pay on that quarterly basis. So it's 4 times a year. Now, a lot of dividend stocks right now are even green for the year. Just look at one of the most popular dividend stocks in the entire market, and that's AT&T. Ticker symbol is T. Okay? Ticker symbol is T. I'm going to go back to, let's just keep the weekly view. We'll just look at a bigger view here of this. This is going back to pre-pandemic, so 2019. That would be this big run-up that you see to the high on the chart. just above my head diagonally that way. Which way are we pointing here? That way, right? About there. This high on the chart right here, that would be December of 2019, right before the big drop off because of the pandemic. Now, year to date, if we look over here to the right, it was down 1.3% today. But year to date, I'm going to scroll down here and we'll see it. Year to date, it's up 12.5% on the year. Well, the S&P 500 is inverse to this. The S&P 500 is down, I think 13 year to date. So here you would have made appreciation on the stock. Plus, it has got a dividend yield. Let's see, right here on dividend yield, you can see that right here in TradingView, 5.24%. So if you had 100 shares of AT&T, well, that 100 shares would be up 12% if you bought in at the beginning of the year, and you'd get $27.75 4 times a year. That's not a bad deal. So a lot of people are looking at dividend stocks, and we talked about high dividend, low volatility ETFs earlier, so we're not going to jump into that, but just individual ones that maybe they have a nice looking dividend and they're appreciating for the year. That's good, right? So it would be really good, AT&T, buying that at the beginning of the year. That would have been a smart move. So the question becomes, well, how do you find the best dividend-paying stocks that are also appreciating or going up? Well, our investors on Patreon get our top 10 dividend stocks delivered to them a couple times each month. And with the top metric being shareholder yield, which is a combination of things that picks out the best dividend stocks. The top 10 boast best dividend stocks, and we give each one a value to show you how they're ranked. So you can choose the best ones to get appreciation on what you're buying, get a good dividend payout as well. Now, I'm not going to go through the details of how we rank that, but our investors do get a copy of what our criteria is, so you understand what we're looking for. Now, if this valuable content is something that you would like to help you along your investor journey, then come join us. Just click the first link in the description. We'd love to see you there. And there are many different options to choose from to fit where you are as an investor and what you're looking for. Okay, let's go over to, I've got a new tab here that I created that has the S&P 500 sectors, so we can look at the charts while we are also talking about them. So first up, 10 out of the 11 S&P 500 sectors finished the day in negative territory, with cyclical groups like consumer discretionary. What we got here? What's this first one? I don't really remember the orders yet, but I think I got them knocked down here. So this is the consumer discretionary right here. It was down 2.9% today. And you can see consumer discretionary has been in a downtrend starting in November of last year. It's been trending down. Then we have technology. Well, I believe technology is this bottom one here. No, that's energy. There's technology. It's this purple one. Technology was down 2.5% today, and you can see it has been declining since December of 21. It's way, way off of any sort of resistance, but it might line up better with support on the way down, but it is still making lower lows and making lower highs. So That's not looking good. And then we have communication services. That was down 2.4% today. Let's see here. Which one was it that was let's see here. What was it? That's consumer staples, healthcare, industrials. I'll get used to the order I have these in, so I'll be able to pull them up. All right, communication services. That's what we're looking for. Look at that. Down 2.4% today, and it has been in this decline since September of 21. September of last year, it's been declining. Big drops. There's technology in this, in the communication services. So that was down 2.4%. All of these, they spent the day at the bottom of the leaderboard. The discretionary sector, and we can put that one back up here again, consumer discretionary. The discretionary sector, it lagged after showing relative strength earlier this week. And again, we're on a weekly view. I'm going to go to a daily view so you can see this. It was popping out of volume here. I mean, look at that. Yesterday, it had a pretty decent day, up 3%. Real nice. And earlier in the week, it had a steady climb that started on May the 25th. But it kind of reached a plateau here. Now, earlier this week, with Tesla making up a significant contribution to today's performance, then we have a top component, Amazon. Ticker symbol is AMZN. Amazon finished a bit ahead of the sector, but it still lost more than 2.5%. The stock will begin, and this is important to know about Amazon, besides this interesting box we have here. Amazon, you can see this on TradingView. When I pop it up right here, it says split 20-1. That takes place on the 6th of June. Earlier this week, I said the 9th of June, so I got that number upside down. So on Monday, the stock will begin trading at its split adjusted basis. All right. So you take 24.47 and you split that into 20 different pieces, and that's where you'll end up. So it's about 120, 124, 123. Amazon on Monday will be $122, $23, $24 a share. And remember, just because a company does a stock split, that doesn't mean that anything fundamentally changes with the company. It's just a psychological thing that, hey, this stock looks a little cheaper. Wait a minute, I can afford Amazon now. Let's buy some Amazon shares. That's really what it does. SPY looks like small cap holder, small cup holder. Yeah, I'll pull this SPY up here. We can look at that. Okay, so that's Amazon. Stock split coming. The price will not be $2,000 on Monday, so it'll be lower. Now, top-weighted technology was also pressured by some of the largest stocks, Apple being one of them. AAPL, Apple was down nearly 4% on the day. Let's see, what did it finish? 3.8% on the day. That's a big mover. And when you see this technology, this is on the daily view for Apple. It's been almost a steady pullback since the snapback rally in March. And then this rally kind of like went up and fizzled out and is falling back down. And when we compare that to the technology sector, you can see a very similar movement there. You know, the snapback rally and then a bit of a steady fall off, except for the one little bump here in the middle. It looks pretty similar to Apple because Apple's got big sway. Positive sentiment up significantly and negative sentiments down. Sentiments down, sorry. Where do you think positive sentiment is up significantly? Because I see a lot of negative sentiment, or quite a bit of it. But Apple, you know, it slid. And this is interesting. Let me go back to Apple, AAPL. This is something to pay attention to when you're digesting a chart. Apple slid from last week's high back to its opening level from last Friday. So if we look at where Apple ended up today, open this daily chart up. I'm going to take volume away so we can just focus on the candles. Apple here, if we draw a line for Apple where it closed, you can see here we go for the 2nd, the 1st, the 31st, which was Tuesday, and then the 27th, which is Friday. This is exactly where Apple is right now, okay? It's like everything it did over the past week was for a swing trade, because it's given it all back. Everything it made on Friday and yesterday, all of it's been given back. So this is an important level right here. I don't think that there are many important levels as we're looking down, because I do not believe we have seen our lowest low yet. And for Apple, you know, that would be 123. I'm sorry, 132 is Apple's low from May the 20th. And I don't think that's the low. I have a stock alert set right here. Let's see, what is it? Let's see, what is it set for? I have it set for $130 a share. So when that goes off, then I'll look more closely at adding to Apple. Okay, so watch those levels, right? When a particular stock or ETF is lining up with the candle of another candle, you know, those can be curious things. Sometimes they can show, well, maybe locally here, not looking at, you know, overall trends or support or resistance, just locally here, you know, this could seem like a local area of support. And traders are probably thinking that too, because Apple did sell down lower than this, but it did pull back up at least to match where it was on Friday. So last Friday. So that's all interesting. Now, the reason Apple kind of sold off is yesterday or the day before. Now I can't remember. Everything is kind of rushing together on this short week. We had Microsoft cut its own growth forecast, right? But today we had an analyst, an outside force, cut their expected growth for Apple. So Microsoft internally cut their growth. Apple had an external force cutting their growth. Now, Morgan Stanley expressed concern about weak May revenue growth in the company's App Store. And the way that I can picture this is you got people playing, you know, apps, games, what have you, and, you know, maybe they were one of those full-time employees that got their hours cut. So now they're a part-time employee and they can't buy the next bundle or rank up gem or whatever it is for the game they're playing on their iPhone. That's where the cut in App Store growth is coming from. And it makes total logical sense. Okay, let's get these questions going before I go further. Positive sentiment is up significantly and negative sentiment is down. Bespoken seeking alpha. Yeah, maybe that was an individual talking. I don't see a whole lot of positive sentiment in the market. I see some negative sentiment in the market, and I do not believe we have reached our final low of this pullback or this bear market, or however you want to frame it, this downtrend. I don't think we've seen the bottom yet. Now, the question here, let me pull this up on the screen. So, what caused the rally yesterday? I thought yesterday's news was bad and today's news was better, and the market still threw up. Okay. This is fundamentally one of the problems that the market is having right now. I'm going to pull up the S&P so we can talk about this and maybe hopefully get this clear. Right now, the market has no idea what's going to happen next. Okay? We're starting with a clean, fresh slate here. The market's got no idea what's going on. Okay? Then let's start adding little pieces on to this. We get reports, earnings reports, this past earnings season, that a lot of companies did better than expected or did better than feared. Okay, well, that looks good. But then we have companies who are reporting guidance in their earnings report that says, well, the second half of the year is not looking so bright. We're going to cut. Cisco, was it Cisco? Yeah, Cisco did this. We're going to cut our guidance. So we have our previous guidance that came out with last earnings report, but this earnings report, we have to cut our guidance even further. Their reason was component shortages. Okay. So that wasn't good for the company. The stock fell. Look at Microsoft's news. Microsoft comes out and lowers its growth rate for EPS. And the reason they give for doing this is a movement in the foreign exchange rate. Initially, investors thought, oh, this is horrible. Just reading the headline, Microsoft cut its forecast for Q4. Seeing a headline like that, and the market's going to overreact. But once the market digested that information, they found out, oh, this cut in growth in Microsoft's EPS, it's got nothing to do with the operation of Microsoft. Well, yeah, that's kind of like what it said in the headline. So then you can see where the market will overreact. And we can actually, I'm going to go to the 5-minute chart. So as I'm explaining this, you can see the market and what it's doing. Okay. put volume so we can clearly identify the multiple days. Okay, so we can see, I don't need to put vertical lines. The tall volume at the bottom here, each one that you see is a tall spike in volume. That represents the end of the day, okay? So we have today and yesterday, and then trying to get it on there. Okay. Oh, come on. All right. So from the left of the screen to the right, this is June the 1st. So this is Wednesday. My apologies. This is Wednesday. And then we have Thursday in the middle of the screen, and then today. So on June the 1st in the morning, we get that Microsoft news. June 2nd. We get that Microsoft news, and the market immediately falls. What was that? Oh my goodness. Microsoft. Hey, did you hear Microsoft cut its growth for the fourth quarter? Did you hear that? Oh, wait a second. This isn't anything to do with the operation of Microsoft. It has to do with foreign exchange rates. Okay. That's not a big deal. So once the market digests that information, then the market can rally. And it even rallied pretty hard into yesterday's close. But again, it rallied into resistance, didn't quite break above it. So while I gave a scenario yesterday of, okay, if this is a rally that's going to continue for a little while, this is what we'll need to see. Obviously, that didn't happen. We got it's up against resistance. It's pushing against something that is flexible, like a rubber band or some rubber or something. And then boom, it gets shot right back down. Because today we get that news from Elon Musk about the warning, the bad feeling that he has about the economy. And then, oh no, it's a prominent, high-profile CEO of a mega-cap company who's a genius by most accounts, saying that something's not right in the economy and we need to cut back our workforce by 10%. Well, remember yesterday we talked about all those jobs that are available. Record amounts. But we're going to start seeing that shrinking, and it's not going to shrink because people are getting hired for those jobs. Remember yesterday I said it's going to shrink because companies are going to start taking those jobs off the market. Because companies are not going to be hiring in this situation we are moving towards. Whether it's moving towards the fallout from a recession and a slowdown in the economy, or whatever the reason is. The consumer being weakened right now with gas prices going through the roof. I mean, gas today, $120 a barrel is where it ended up at. That's just extremely high. And then we have analysts cutting growth at Apple. It's specifically the App Store. And that's where the consumer is spending discretionary income. And that could be setting the stage for a disappointing quarter from Apple. At least for its services division from the App Store. And you know, as the consumer weakens due to higher prices and like everything from inflation and potential worries about job security, there's just less money to spend all around. And the market is always, if you think of the market as always an overreaction. Think of the market as always an overreaction. If it's awfully excited, it's too excited. If it's awfully down, it's too down. And the market moves like that. Now, it's tough. It's tough, especially for new investors. I understand. I used to be a new investor too. But as I mentioned yesterday, having a strong balance sheet is when you make that balance sheet strong when times are good, so it can protect you when times get tough. American Eagle today, it announced a series of actions to strengthen its capital structure. That's making sure that they're in good financial health, so their balance sheet can act like a shield to protect them from the economic problems that are right in front of us, that are coming our way. Their balance sheet is the ultimate shield. Micron today, let me pull up Micron right quick. And this goes into this narrative. I'm trying to show you, I'm going back to the daily view here, and then I'll pull up Micron. Ticker symbol was just MU. Micron was the worst performer in the tech sector. We think that things can't get any worse. I know this is a feeling that comes up a lot in the market. That, I mean, look at Micron here. Over nearly the past 3 months, it's had 3 bottoms that are very consistent and close to each other. Look at that. Almost identical. I'm going to put a line right there on the bottom of them. Okay? Right about $65 to $66 a share. Right there. May the 25th. May the 12th. May the 27th. 3 lows. And they are all within pennies of each other. So looking at that over a longer span, we can go back to this bottom right here before this reversal on October the 12th of 21. It also hit this exact same spot. Sometimes investors will see this and think, oh, things can't get any worse than this. This is like the bottom, the base for this company. But unfortunately, when economic conditions change, it can get worse. Micron fell back below their 50-day moving average. And remember, one of the simplest things to remember about moving averages, bullish above, bearish below when it comes to the 50-day moving average. Simple 50-day. You don't have to use any other type. The simple 50-day moving average. Now, Micron was downgraded to underweight with a $70 price target from Piper Sandler today, I believe it was. Now, the downgrade in Micron also produced weakness in Nvidia. Let's look at Nvidia. NVDA is the ticker. And this is all connected, and you're going to see why here in just a moment. Look at Nvidia. It was down 4.4% today, nearly 4.5%. Why was Nvidia so weak today? Well, Nvidia buys memory chips from Micron. So if Micron is not doing good, if they're not able to produce these memory chips for Nvidia, then a likely conclusion is that Nvidia is not going to do good as well. And this is another lesson that I wish I understood when I first started investing. How are different companies connected? Who buys from who? Knowing this can give you the knowledge to see things in the market before others do, keeping you a step ahead. Now, it's a rabbit hole to go down, I have to admit. And I wouldn't expect an investor to go down the path for every company to understand who's buying from who. But if you are, just pick a sector that you're interested in, or start with a company that you are interested in, or start with a company that you really like. Remember, one of the most fundamental basics, first things to do as an investor is if you like something, if there's a product you like, a service that you like, buy that company's stock. If there's ever comes a time where you no longer like that product, you don't like that service, you sell that stock. That's the most fundamental way to teach kids, especially kids, how to choose companies to invest in. But knowing how things are connected, who's buying from who, it can help you to see things that others don't. Let's see. I was so confused today. I can understand why, but just remember, maybe I should have been maybe I should have been clearer yesterday. But on the S&P 500, when I gave that scenario about the snapback rally that occurred earlier, the middle of March to the end of March, and I was comparing to see how that might play out if it were to occur now, and we were in that little phase of consolidation, I'm going to start saying hypothetical, okay? If I'm game planning something out, I'm going to start using the phrase hypothetical, so you know that this is a hypothetical game plan theory that I'm putting out there. Because yesterday, the signs were pretty clear about at least the S&P 500 that it was right up against resistance. And it was like, again, I've said this a couple of times, it's like it was trying to push through. I don't have a rubber band here, but actually I have one here. But it was like it got right up to resistance, and it was trying to push through, but couldn't quite get through, and then was eventually snapped to go back down. That was the setup we were in. So I'll be more clear about hypotheticals, game planning, theory crafting versus actualities. I'll do better at that. So that's what happened today. And what let the rubber band go to let the market fall today was all on Elon Musk and the few cracks that were in the employment report. But whenever you have a high-profile person come out and make a positive or negative comment, the market will overreact to that comment. I lost so much money this week. Yeah, weeks like this that are very volatile, that there's not a lot of direction, they're hard ones to figure out. I mean, they are the hardest ones to figure out. I will definitely give you that. Musk is involved in politics, also pressuring unionization. Macroeconomics always affects stocks. That is true. Macroeconomics always affects stocks. That is an absolute true statement. Nvidia for you. Been using mine since I was a kid. In my PC. Yeah. Okay. So, yeah, today was a confusing day. And when it comes to Monday, it's going to be no less confusing, uncertain. I'm sorry. I'm getting my thoughts and my words mixed up. If we look at the chart right here, let me hide volume. Where we ended today is right above an area that could be a short-term, or what I would call a local support area. And when I mean local, I mean the past few sessions, no more than 1 month time, we could have a local bottom or a local top, but it's a very condensed time period that I would be referencing. What the market wants desperately is a bottom, a place where we can say, we found the bottom, here it is, let's start digging our way out of this hole. But unfortunately, with the waves of information that is hitting this market, it is really, really, really tough to believe that we've reached bottom yet, at least on my end. If we look at, let's see here, I want to open up the, all right. So with the employment report here for just a moment. Let's see here. So the note that I sent out to you guys, let's see, it doesn't give me the time it was sent. It just says 10 hours ago, but it was about the May employment report. And there was a point in here that I mentioned, and it said, another point of contention is that this employment report was still too good overall to convince the market that the Federal Reserve is going to pause its rate hikes after its increases the target range for the Fed funds rate by 50 basis points at the June and July FOMC meetings. That's important to why this market was down today. Remember earlier this week, it might have been late last week, where the Fed came out and said that, oh, maybe in September we can push the pause button on interest rates, right? Maybe in September we can push the pause button. Now, when investors heard that, they heard no more rate hikes, let's go to the moon. That's what they heard. And then, and let me just rephrase something I've said many times before. When rates are going up, when the Fed is raising rates, typically the stock market is going in a downtrend. And remember, the stock market doesn't move all in one direction at once. It's got little ups and downs like your heartbeat, right? But the overall trends are what we look at. So when you have a comment last week or earlier this week about maybe we'll pause making rates go higher, the market, again, it overreacts with everything it does. It's going to send the market higher. And then this week, like today, you get comments, well, I don't see how we could possibly pause raising rates in September. Or another Fed member saying, well, I think rates will go up by 50 basis points in September. The market's going to come down with comments like that. Remember, in the market, historically, and I'm going to pull up the month chart here. I'm going to take all the drawings off, only look at the candles. S&P 500. This is going back to 2010. Let's squeeze it so we get a few other dates in here. A lot of the major reversals in bear markets, like right here at the bottom of 2000, from the 2000 burst. Remember the tech bubble in 2000? We didn't hit bottom for another 2 years. It took 2 years before we hit bottom. Excuse me. And we did not do a reversal and start marching higher until the Fed did a U-turn. The Fed went from raising rates and tightening, quantitative tightening, to quantitative easing and lowering rates. Almost every major bottom in the past decade, over a decade, has come when the Fed has reversed its decision and started putting money into the market instead of taking money out of the market. Also, remember, I think I said this last Friday, if not on Tuesday, I think I said it on Tuesday, that June 1st was the first day that the Fed is going to start quantitative tightening, meaning the Fed is literally taking money out of the market. And when liquid and when money is coming out of the market, stocks go down. And I said I didn't think it would happen all at once, but I thought it might be a drip, drip, drip of the market coming back down because of quantitative tightening. That also helped the market to go down today. Yesterday was just an overreaction, and we really saw that in the last half hour of the day, an overreaction. Overly optimistic. Something else to remember. Good investors are not optimistic. Good investors are also not pessimistic. Good investors are realistic, okay? We don't get overly excited about something or overly sad about something. We stay straight-faced right down the middle. We look at what's real. Otherwise, we end up losing. Okay. There was a couple other things that I wanted to mention about today's market. Now, the commodities have been doing pretty good. And the commodity sensitive material sector, it was down a 1% today. Which one again was materials? That's it. Let that load. Materials has been doing good. This is the daily chart again. This is for the materials. May the 12th, this turned around. It's making higher lows, which is a positive, and it's making higher highs. We really only have 2 of them, so it's not like we have a lot here to judge. But you can see from here to here, that's a higher high. And then we go to here, that's a higher high. You could even say today was a higher high. Now that's not the trend line at all. The trend line looks closer to this, although there's only 2 touch points, so that is not a confirmed trend line. And then the higher highs are here would be 1, here would be 1, and then on this little pullback that we're having with today, we need to see it bounce off of this support and then go higher and make a higher high from this point here. That's what you want to see on any stock chart, not just the commodity stock chart here. On any stock chart, that's what you want to see to show that you're in an uptrend, okay? You want the higher lows, like we start at the bottom. This is a higher low, okay? That's a higher low. That's a higher low. These are all bullish things that you'd want to see in a chart. All right, let's clean this up a bit. There we go. All right. So it was down 1% today, and it couldn't avoid a lower finish than energy, though. Energy was the sector, and I believe it's this bottom one. Yes. Energy, and you can see it is still in its trading channel here. Energy's on fire. Now, we thought maybe that energy had maybe reached a local top, and maybe it was going to consolidate or have a pullback. That wouldn't surprise me. Energy was up 1.4% if I didn't mention that already. But energy showed continued resilience. Now, oil, that's the big reason why energy is able to stay elevated like this. But if we look back here, the beginning of March towards the middle of April here, we had higher highs in this cluster, higher high, barely, but a higher high, and then higher high. We had our pullback, and that was a problem because we were making higher lows, higher lows, higher low, and then we broke that trend. If we're getting higher highs, higher highs, higher highs, and then higher lows, higher lows, higher lows, and that trend is broken, if this is a trade, you get out of that trade because that's been broken. And I know I'm kind of rambling here a bit. I don't have a story really together with what I'm talking about, but I'm just sharing these ideas as they pop into my head. Another important lesson for a new investor is setting a trailing stop loss. They are crucial for trading. They are also crucial if you are starting a position. Now, you set them up differently depending on whether trading or investing. If investing, you might give your trailing stop loss a little more room to breathe because you're doing it for the long term. Trading, you might want that trailing stop loss a little bit tighter so you don't lose your gains. So for me, I typically set a trailing stop loss with a percentage. So say, for example, the percentage is 2%. So the stock goes up by 5%, my trailing stop loss goes up right along with it. And then if the stock drops by 2%, boom, stop loss is triggered and I'm out of that trade. I made 3%. So that's how I set up a stop loss for trading. Now, if it is a stop loss for an investing vehicle, then I might allow 5% so that that stock can breathe and move around a little bit, because you may get fluctuations in an uptrend. Just a couple of things that just popped out into my mind there. All right, just want to share them with you. Okay, let's clean this energy up a little bit here. All right, we are making higher highs still now, since this low that touched support. Higher highs all here. Higher highs still. Higher highs still. And right now, this is where we could get consolidation sideways, like it moves sideways right here. Or we could get a pullback like we got a pullback right here, because it really stalled at the top up here before we got this pullback. So it could be stalling up here at the top for a few days, and then we get a pullback. So right now, your risk reward for energy, I think, is on the small side. I think there's more risk than reward at this particular moment in time. But that's for energy, and we'll see. $120 a barrel, that is going to crush a lot of consumers out there. Now, the sector did return to its high from Monday. So you can see where it closed at today versus where it was, let's see here, on the 27th, which there's almost a flat line right across there, acting as resistance. So it breaking above that, I wasn't expecting that. I was expecting this to go down and have a pullback. All right. Oil, because we're talking about energy, we have to talk about oil. It was up another 2.1% today. US OIL, you get your oil there. Oh my gosh, it is at $120 a barrel right now. Look at that. Look at that, $120 a barrel right now. That is just crushing everybody and everything. It has broken above its trading channel here. Oh man, I don't even like this. Gives me a sinking feeling looking at that. It is just rough. It's just rough. I've heard people talk about $130 to $150 a barrel, depending on how things go this winter. And and how much consumers actually travel this summer. So, man, it's a rough one. I feel for people too, because this is a hidden and at times, unfair tax on all of us. Just think of the diesel prices that have to go into filling up these trucks that have 1,000-gallon tanks, 500-gallon on both sides of the truck, 1,000 gallons to fill their truck up. And that's delivering all of our fruits and vegetables and everything, our food and what we need to the stores. That's going to cause everything to go up. Now, Treasuries did also finish the week on a lower note. The 10-year yield, it went up by 4 basis points. And remember, when I say the Treasury market was down, it didn't do good, rates are going to go up because it's inverse of how the stock market works. US 10Y, US 10Y. For the 10-year, it's 2.96% is where it ended the day. It's down a little bit from that in the after hours. The 2-10 spread ended the week at 28 basis points. So that's the difference between the 2-year and the 10-year. Unchanged from exactly a week ago, as the 2-year and the 10-year both increased by 22 basis points this week. So they were in tandem together. Now, looking at today's economic data, let's talk about it a little bit. We had the May non-farm payrolls. They increased 390,000. The 3-month average for total non-farm payrolls decreased to 408,000 from 516,000. May private sector payrolls increased 333,000. May's unemployment rate was unchanged at 3.6%. It was the exact same in April at 3.6%. Persons unemployed for 27 weeks or more accounted for 23.2% of the unemployed versus 25.2% last month. The U6 unemployment rate, which accounts for the unemployed and the underemployed workers, was 7.1% versus 7% even in April. So it rose by 0.1%. Now, May's average hourly earnings, they were up 0.3%. Over the last 12 months, average hourly earnings have risen by 5.2% versus 5.5% for the 12 months ending in April. The average work week in May was 34.6 hours. I'd love to know who works 34.6 hours. And that was unchanged from April. So I found that interesting. 34.6 hours a week. For 2 weeks, right? 34.6 hours for 2 weeks. Now, the manufacturing work week was also unchanged at 40.4 hours every 2 weeks. And factory overtime actually went down 0.1 hours to 3.2 hours of overtime. Now, the ISM non-manufacturing index for May decreased to 55.9% from 57.1%. Now, the dividing line between expansion and contraction is 50%, but we are slowing our growth by going from 57% down to 55%. So that growth is slowing, but it's not contracting or negative at this moment, because that would be at 50%. Now, the May reading marks the 24th straight month of growth for the services sector. And remember, services sector that was hardest hit during the pandemic. But it is the lowest reading since February of 2021. So that's a little interesting there. What I would say is the main points is that business activity for non-manufacturing sector has slowed for the second straight month as businesses continue to grapple with pricing pressures, supply chains, labor supply constraints, and I think they're setting themselves up for the slower economy later in this year. All right. What else or have we talked about? I drive a hybrid, and it still hurts. Yeah, I feel for everyone out there because oil, it's just not something that we can turn off whenever we want to. We have to use it. Many Americans going back to the office, a lot of offices are saying you need to come back to the office or else. And that's putting commuting on people that maybe have been working at home for the past couple of years and not having to deal much with gas. That's why we had low demand for gas there for a while. But man, I just feel for people having to pay. I know my wife does a lot of driving for work, and it's rough. It's rough. All right. Well, anything else you want to talk about? I know it's a Friday night. Don't want to keep you too long, even though it is, wow, it's nearly 9 o'clock here on the East Coast. Don't forget, if you are not following us on Twitter, please do so. It's just at Ticker Time News. There was an coverage initiated on Snowflake, which I thought was interesting. With an outperform rating and a price target of $184, Snowflake recently got hurt pretty bad from its last earnings report. The ticker symbol is SNOW, SNOW. But that upgrade today did nothing for it. It slipped another 6%. So, I mean, this thing has just been coming down like a rock. And again, a lot of software companies are. So we measure from where it is, from its highs. I mean, that's 67% that it has dropped. Yeah, that's just rough. Oh, cool. 650. So you must, that West Coast? 3 hours? Is that right? West Coast? Well, then, yeah, okay, cool. Oh, one thing I didn't talk about, and I want to get into a better habit of at least bringing them up, is crypto, because I think we are seeing an opportunity. I do believe Bitcoin, just like the broader market, you see Bitcoin, it is really holding nice in this box here. And I think it's just going to, it's going to move sideways. It's going to hit this resistance line. And then what is it going to do from that resistance? As it moves sideways, it hits this. What's it going to do? Is it going to move down it? Or is it going to find a way to break through it? I'm not sure yet. But either way, it is hitting one of these two resistance lines, I think, and making one more leg lower so it can get to this area, which is around 20,000. So about 10,000, 9,000 from where it is now. And that's where its base will be built for the next launching pad for 2024. Capitulation in the stock market and the crypto market. Capitulation is what I'm looking for. That's when investors throw in the towel, they give up, they quit, they sell. And it's usually a very painful move down for those not prepared for it. So just remember, you don't have to be an options expert to short the market. You just have to know the vehicles that are available for you to use. For example, there's an ETN, SPXS, that shorts, per se, that shorts the S&P 500. So when the S&P 500 is going up, it is going down. When the S&P 500 is going down, it is going up. I've been using it all year long. And I do believe, is there a... No. Okay. So that's just an easy way. You also can use it to go long. SPXL. That's to go long on the S&P 500, but I wouldn't hop into that right now. I would still take it as being short and making another leg down. Los Angeles, yeah, okay, cool. LA, nice. That's pretty cool. That is pretty cool. Sunny in California. I'm sure you've heard throughout watching these live streams, I'm here in Northern Virginia. We who live in Northern Virginia, we almost think of it as our own state, right? You've got West Virginia, that's to the west. You've got Virginia, which is south, right? And then you've got Northern Virginia. Little insider thing. All right, cool. Well, cup holder. You could see that. I can use it. Actually, let me go to the SPY. So you can see that it is right here. It looks like a cup. And then you got its handle right here forming on the chart. Yep. It's happened before. So the straight up definition for cup and handle, if you don't use this website, mark this website down. It is a very important website because it is like an encyclopedia for investing. I'm sure you use it. I'm sure you know about it. But Investopedia, this is literally the best place to research investing topics. You can become an absolute pro, especially with the jargon used. It is awesome. I love this website. No sponsor, but I love that website. But they say the definition for it: a cup and handle is a technical chart pattern that resembles a cup and handle. And again, so we see it for reference on the SPY right here. Where the cup is the shape of the U and the handle has a slight downward drift. And we're on the daily here. Let me go to the 4-hour. And besides yesterday, we could, almost see a downward move like this, right, to form that handle. But I'm kind of stretching for it here to get that downward move on the SPY. But if this was a move downward, and yeah, I could possibly see it more on the top than on the bottom. A cup and handle is considered a bullish signal extending an uptrend and is used to spot opportunities to go long. So typically you have this cup, which is almost like a bottoming effect. And once you reach the center, of the cup, it should start to be swinging in an upward direction. And then you basically are reaching about the top of the cup, right? And that's when you start to make your handle, and the handle needs to be coming down, right? It needs to be moving down to act like that little handle that you're holding in your little coffee cup. And then the typical move that's made off of this is a move to the upside. That's typically what you see on a cup and handle. So that's the pattern that's kind of starting to form here. I'm just not seeing the downtrend enough. But again, things aren't always perfect when it comes to investing and charting to trade and so forth. But it is pretty close. I know I put all these lines on here. It is pretty close, especially on the top line of this handle. So again, this top line, see, it's nearly too flat, right? It goes right across there, and then we have this V dip, and then it goes kind of over and down. That's why I'm not seeing the handle as clearly here. And then, of course, you can have cup and handle patterns that are inverted, that are upside down, and those would be bearish signals. So typically any technical signal you can have an inverted version of it, just like the whole head and shoulders pattern. You can have that inverted and mean something completely different. Like there are many who see a head and shoulders pattern on the S&P 500. And as a matter of fact, if I go, I think monthly is too tight to see it. Yeah, monthly's too tight. I need to go to weekly. But basically, we have one shoulder right here. We have a head right here. And then we have the other shoulder that was forming over here. And the black line that stretches across down here would be the neckline. Now, the neckline did it was broken right here in this area. And then we had our real short rally last week and a little into this week. But now we're starting to pull back down. And I really do think that we are headed lower from this position. I think this yellow box that we are currently sitting on right now, this is as high as we're going to be able to muster. And what we're looking to do is we'll probably, zigzag our way down to this area where we had our third super low of the year, and we'll probably, we could very potentially hang out there for a moment, but I don't think that's where we're going to stay. Because if I extend this trend line out, let me line it back up. Then it's very possible that this market is going to go down to here, to this box. And if it follows this trend, it would be our fourth super low of the year. And the first time that these two areas match up is in July. So we could have consolidation where we're just moving sideways, but a little bit on the downside, kind of, maybe, let me clear up some of this work here. And these are hypotheticals, except for this trend line. This trend line is no hypothetical. All right, let me extend this trend line back down to where it was. I got to keep everything lined up here. So it would be the middle of July if this trend line stuck, and this is where the market is going. And again, that's around 3,500 on the S&P. Then that would be about the July time frame, middle of July, when we get into this area. Then I would start saying, you know what, we're at a bottom. I would start looking for a bottom at that point, because if we go from our high to this in July, that would be a 25% pullback. A 25% pullback. And man, sometimes I just don't think that 25% pullback is enough. Sometimes I think it would be more. That's why I have this other yellow box down here, which puts us at 33% off our high. And this is sitting, I believe it's right around 3,200. So nearly 900 points lower from where we are right now. But yeah, that's for later in the future. We'll see about that. SPY and SPXL look like cup holder form. Yeah, they do. I'm just not seeing the handle come down steep enough. The handle to me looks a little too flat. Today, insiders by MS, ANET, TDOC. I hope people more positive into the half a year. I think the second half of this year I think that's when all the economic troubles are going to end up bubbling right up to the surface. Right now, they're just little hints and possibilities that are under the surface. But I think those negative economic numbers, they're going to be on the surface in the second half of this year. The later the year, the worse it's going to get. That's my belief about this right now. That's my hypothesis for the overall market right now. And part of that is the consumer is being weakened right now and will be weak in the end of this year. The consumer was strong at the beginning of the year, being weakened right now, and will be weak at the end of the year. So my investment thesis for the market sees it going that way. I would love to be wrong, and I would love to see signs to point to that direction. But all right, I'll go ahead and wrap this stream up. We've been here for a good long while, and I don't want to keep you all night on a Friday night. Go have some fun. It was a tough week. It was a very volatile week, but it looks like we're getting back into that habit of heading lower, not higher. Although, you know, every week we can, it's possible to see little patches of green because the market doesn't just go straight down or straight up. Very volatile. I mean, look at this. The past 1, 2, 3, 4, 5 sessions. Basically, the price didn't move, right? I mean, look at where we were last Friday and where we were this Friday. Not that far off as far as price here for the S&P 500. We closed last Friday at 41.58, and we're at 41.08. 50-point difference in 1 week, but yet we were up and down significantly at times, but only a 50-point difference within 1 week. That is called volatility. Okay, ladies and gentlemen, thank you so very much for watching. I greatly appreciate each and every one of you. I know it can be tough at times. We'll get through this. We'll learn from each other, and we'll be better. How about that? Okay. I will see you. Have a good weekend. Have some standalone videos coming out this weekend. Please click that like button. That greatly helps out. Subscribe. Share this video. All of that helps. And if you want more insightful information, click the first link in the description and join investors just like you and me to beat this crazy market. All right. Thank you. I'll see you in the next video. Take care.